All right, hello everyone. Welcome back to the Rational Investors Daily Brief Recap. Wow, what a night we had. Actually, I would say probably what a morning. Really good lesson. We spent lots of time in our daily brief this morning talking about the importance of squaring up positions heading into big fundamental event windows and the whole market, it felt like, was coiling into that Fed Chairman Powell's speech in Jackson Hole, Wyoming this morning. And we spent lots of time looking at the different comments of Mr. Powell. Ironically enough, it almost felt like he was trying to placate the market. We had a number of Fed governors come out through the week with speeches that were fairly hawkish. And in essence, almost sort of set up that thesis that maybe the Fed wasn't done raising rates. But in his speech clearly today, he pointed out, and I put out lots of tweets, so by all means follow good old Brian on Twitter. If you want, at CR Investor, if you didn't know what the Twitter handle is. But basically came out and said that the economic situation around the world is challenging, and that the Fed was they were carefully watching developments and they would act if necessary and appropriately. To a certain degree, that was almost sort of like a trade resumption comment, that basically everything that had been going on for the past few months, things like the fear proxies in the marketplace, gold, yen, bonds, all could basically resume their previous course, and that maybe risk on assets like stocks, crude oil, Bitcoin, of course, is another conversation altogether, which we'll talk about shortly, but they all sort of continuing their malaise. I would say that, coming out of that Fed speech, we also had a bit of a bombshell dropped politically in that the leader of the United States of America came out and actually told American corporations, and I won't find the line, it was in his sort of rhetoric, to start looking for alternatives outside of China. So, I mean, wow, what a bombshell. Stock market did not like that at all, started to come off in earnest. And I think put the two together, the idea of the Fed maybe not being as aggressive on interest rates, and so potentially even cutting interest rates some more, took this sort of wind out of the U.S. dollar rally sales, and as you can see, the dollar index itself has come off precipitously. I think we sort of talked a little bit about it. I would have preferred to see a trade location against these candle body highs on the weekly charts. But we didn't really get that, off of the daily charts. We didn't really get a rally into that level. But I do remember yesterday I said that it didn't surprise me if some traders actually did decide to hunt shorts against these highs. So it looks like they're getting paid here. And on the daily chart, you can still see there's this cheeky little gap all the way down at 96.13. And if the market's actually believing that rates in the States might even come down some more, we might see some follow through. And now that the fundamental event is out of the way, let's see if we get any follow through and whether this big M actually confirms. We had talked, I guess, recently. Whoops, changed the wrong chart. Sorry about that. We talked recently, in fact, actually, I'm sort of running out of time. So I think I'm going to leave that conversation about the U.S. dollar at that today. Clearly coming out of the Fed event and Powell's dovish comments, the U.S. dollar index is coming off. You could argue that, like I said just a moment ago, all of the sort of fear proxies in the market, including the Japanese yen as a big component of this U.S. dollar index, are catching a big bid. And things like euro are jumping up this morning, but specifically what I wanted to point out was it looks like all of the sort of risk off assets are catching a fairly aggressive bid, including even things like gold, basically testing the highs that we just saw there recently. We did have potential short trade setups working, but again, as I said before, spent a lot of time in the daily brief today talking about how dangerous it is to put on big positions heading into big fundamental events, and kapow, this short setup got busted out right across the board. We did actually look at this in detail, and the trade actually quietly got stopped out. It wasn't really that violent of a move, and I even put out tweets to the effect that stopped like a broken rented mule. And so those short ideas are completely off the table. I also wonder too, we talked about this diamond pattern. Sometimes you do get these what we call head fakes. And especially ahead of that Fed announcement, I get the feeling that this was a very head fakey move, and we saw it right across the board on all of these assets. The bonds head faked into that event to the downside and then ratcheted right back up. Euro head faked to the downside, ratcheted right back up. Japanese yen, which I commented about there just a minute ago. This is the daily chart. If we go down to that 4-hour chart, you can see again head fake lower and then kapow into that event. As I said just a moment ago, of course, risk on assets with the fact that the Fed is saying that, holy moly, maybe the global economy is a lot weaker than we thought, and we better go cautiously here out of Mr. Powell today. And then right after that, Mr. Trump coming out and saying that, American companies are ordered to find alternatives. Dangerous language he's using. Risk on assets are just getting their asses handed to them here. And that's including stocks, but also things like crude oil. And crude oil is actually emming out now here on the other side of this triangle. Again, another example of head fake. The fundamental event happens, and then actual trend resumption of what was going on before. So we put it all together. Risk off is definitely back on, and risk on is looking to me like it's definitely back off. Where does Bitcoin fit into this conversation? It's funny how we have these debates almost on a daily basis where frankly, I don't know. And I think, I even put a tweet out to that effect earlier this morning, if I can find it here for you. But it doesn't look like I have the chart just in front of me. Isn't that weird? I must have closed it. Anyway, I'm still debating as to where Bitcoin falls on this sort of risk universe. And I had put out a tweet to the effect that, no, I can't find it. Anyway, put out a tweet to the effect saying, Mr. Tom Lee had sort of done this really cool presentation that the entire community really liked, talking about how Bitcoin has different alpha. And today it looks like Bitcoin's part of the risk off conversation. I don't know. Sometimes it's risk on, sometimes it's risk off. We'll talk a little bit more about Bitcoin in just a moment. Before we leave the stock market, if stocks are going to break and risk on is off, then we're watching the pharmaceutical sector very closely on TRI. I've got a bunch of pharma names on my books, on my personal accounts and stuff. And a couple names just jumped out at us. So if you are interested in stocks and you do play the market, DFFN looks like a really interesting name. You can see the potential double bottom that's trying to come in here, so keep an eye on that guy. I'm going to be watching him through the day. And actually, my co-host here, helping me drive the bus this morning, Kevin, he found this interesting pharma name, VTGN, and you can see the bottoms working here as well. So a couple names in the stock market for you to do your own due diligence. Take a look at them if you're interested. These are the kind of names I might be interested in buying. If risk on is truly off and the broader stock market starts crapping out, usually pharmaceutical stocks catch a bit of a bid through that. Talking specifically about crypto, ironically enough, as I said, is Bitcoin risk on? Is Bitcoin risk off? I think we actually have a nice little rally going on in Bitcoin right now. Does it correlate with yen, gold, and bonds? I don't know. Jury's still out there. One thing I did talk about at length in the daily brief today, but I don't know whether I still have the chart on here or not, is it sure looks to me like Bitcoin is running about a week behind the stock market. You notice incredibly similar chart patterns here. And as the stock market started to climb the wall of worry coming out of this reload zone last week, here comes Bitcoin kind of climbing the wall of worry coming out of its test of reload zones this week. And I mean, the candle body lows as trade location, nice little FU moves. I mean, it's remarkable how similar these things are. So if that is the case, and Bitcoin's following sort of the path of stocks, but is like a week delayed, then I would be thinking that we're going to rally back up into these top end of the ranges. And for those people that did trade things like reload zones, it actually set up a very pretty trade. We talked about this at length. You know, there is that reload zone. You know, my little Gann analysis suggested that we should be looking for a bit of uppy here. And interestingly enough, its 2-to-1 objective on the trade going long off of this reload zone test and the candle body lows is basically a test of those highs. Or basically what we're thinking about that sort of correlation between Bitcoin and stocks. So I am looking uppy on Bitcoin right now. But at the same time, too, what I'm also noticing, and we've been talking about this on the site as well, is that we are starting to see some structural signs of encouragement coming out of things like the broader altcoin universe. And of course, we've got this debate going on. Does the Bitcoin dominance actually fail here? I do believe that this is a coin pickers market. So, you know, here we talked about this ICON yesterday, and one of our site members, Colin, pointed out on his site that he works on, Bravado Trading, I think it's called. They were watching really closely the relationship of WAN and AEON, and we sort of talked about how these guys were potentially getting ready to rock and roll, and sure enough, you can see the nice rallies that they'd had there. So we did talk at length this morning in the daily brief about how to set up sort of screens for location, divergence, structure, go. These guys all sort of came in, they met the criteria, and you can see the rallies that ensued. So there are bull markets in crypto. You just have to be very patient, you have to be disciplined, you have to hunt those setups, and of course you got to live with the results. All right, I think we'll leave the daily brief recap at that. Have yourselves a great day, everybody. All the best, and bye for now.